Good morning, everybody. Mike Vaki, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, the bulls are in control. They're in control, and the one of the number one rules that we follow in the room, and it was different back in 2008 and 2009, but this is the rule now, and it's a rule you have to remember. The bears are horrible. Okay, and I've PG'd that rule for the purposes of this webcast. The bears are awful. They are horrible. And beyond, for anything more than a one-off to a couple of days, you have to assume that the bears are going to drop the ball, and you have to position yourself such that the bears are going to drop the ball, so that when we're over here making minus 1,600 ticks, as the sky is falling and nobody really knows why, Cherry Ellen may have meant something, but she may have meant something else, but the statement said this, and somebody hit the button. I would argue that you will do your account much more good than bad if you bought those dips rather than started to look out over the cliff. Because when everybody, whenever we start to get to the edge and looking out over the cliff, that's right when the wave comes, and the wave takes us up, generally to new highs. With the breakthrough of 67, if we hold 67 today, because we have been talking about 67, correct? 67 had been an issue for the bulls all week. I got to get out on a 30 now. Okay. Failure from the prop level. 23's print, walk it back. Resistance right into the Fed announcement, 66 to 67. Drop off to 42, which gets tested. Okay, and this test here corresponded with the middle band on the June contract. Okay, the 20-day simple moving average. Once that was established, there really wasn't anywhere to go but up. I mean, the bears at some point start to run out of answers. The last thing that they would have been able to muster would have been continued resistance at 67. And that's broken through now. It's broken through in the middle of the night. So in my opinion, let me tighten up here now. Let me get on a shorter time frame. In my opinion, it's going to need to get tested. 67 will get tested in the regular session. Okay? If that test is successful, if 67 now becomes support where it had been resistance for so long, I see really nothing absent major news to stop us from going to new highs. I'm not saying we get to new highs today. That would take quite a move, but I think the grind higher is on once 67 gets put in the books as support. Let's hop out on the daily chart. Okay, here on the daily chart you can see this move lower off of 87.5. So the argument, the argument that we keep going up and up and up and up and up and up, that's not valid. It's not valid now. Talk to me about that argument up at 1900, because we just did 1887 to 1823, and then we established a higher low at 1842 off of the Fed, and that higher low was established on gigantic ticks. Okay. Now the converse of that is, if we lose 42, the bulls have huge problems if they lose 42. What's the likelihood that they lose 42? It's not real good. It's not real good. So the middle band of the continuation contract today is 59.5. Let's get on June. You can see June. Today it's 54.6, but at the when 46 got tested, that was testing the area where the middle band was during the Fed area, during the Fed announcement and the aftermath. So 46 is a key area. So you got to be watching 59.5, 54.5 today if we get a deeper move lower. But my suspicion is that what's going to be important is 67 and a potential move higher. Now, where's resistance? You've got resistance at 75. You've got resistance Had to pull the support and resistance table that we do for our subscribers. You've got resistance at 75. You've got resistance up at 1880. And after that, you're really just talking about the swing high up at 87.5. Okay, so everybody have a fantastic Friday. Trade, watch basketball, have a good day, have a fantastic weekend. I'll be back Monday morning with another webcast. Trade 'em well, everybody.